And good afternoon. This is the Elliott Wave weekly update for the Dow Jones 30. And it's being recorded on Saturday, July the 19th at 12:35 p.m. Pacific Daylight Time. I'm starting here with the Dow Jones cash market, and I'm on my monthly maximum chart. And so I'm just going to do a quick review. Those that say they already know, great. But those that may be their first time coming in and checking out my work, I start with the largest picture that I have. And right now, this data comes via the Thinkorswim platform, and the data goes back to 1902. So we basically have 123 years of data to review and to chart. And I started this via what R.N. Elliott started in his original works, which I do have copies of. And so he came with Grand Supercycle Wave 1. So he has Grand Supercycle Wave 1 completing in 1929, Grand Supercycle Wave 2 completing in 1932. That puts us in a Grand Supercycle third wave, which began in 1932, still underway. So what's going to be inside a Grand Supercycle Wave 3? Well, we have 5 waves of supercycle, of which we have 1 and 2 complete. What's going to come inside supercycle wave 3? 5 waves of cycle degree, of which we have 1, 2, and getting ready to complete 3. So we're going to take it up to that level. And so what's going to be inside of cycle wave 3? Going to be 5 waves of primary degree, of which we have 1, 2, 3, and 4 complete. We're in primary wave 5. What's going to be inside of primary wave 5? I'm going to bring this down, put it on my 5-year weekly, are going to be 5 waves of intermediate degree, of which we have 1, 2, there's 3, there's 4, ending in October of 2022. So we are in intermediate wave 5 of primary wave 5 of cycle wave 3. So within intermediate wave 5, what should it consist of? 5 waves of minor degree, again, which 1, 2, 3, and 4 are complete. Now, if you follow my work in the S&P or in the NASDAQ, you realize that I had presented last week a account which would have suggested that the minor fourth wave was not complete on April the 7th. That's been reshelved, put up back on that top shelf and kind of put away for a while because after tagging last week, I do feel that minor wave 4 completed on April the 7th of 2025. So that puts us in a minor fifth wave. And I'm going to come down to my daily. There's the minor 4. So what's going to be in this minor fifth wave? It's going to be 5 waves of minute degree, of which I believe we've completed 1, 2, and we're in the closing parts of likely minute wave 3. There's also a possibility that minute wave 3 may already be complete. So not that easy to kind of tell right now. So that's where we're going to start from. So we still have a minute third wave to reach up, get a minute fourth wave in, put in a minute fifth wave before we're done with minor wave 5. So minor wave 5 continues to have some resistance for completion points at 46,183. That certainly would fit the bill. We're looking for the market to get up and get above 45,073, which is the current all-time high for the Dow Jones. We're looking for a new high to complete minor wave 5, so it needs to be above minor 3, which in this case it would, and then to in turn complete minor 5, intermediate 5, primary 5, and then cycle wave 3. So again, cycle wave 3 began in 1949. I'm pretty sure it was 1949. Let me just double check that. Yes, 1949. In fact, come August, we will have been inside that. It'd be 26. It would be about 76 years that cycle wave 3 has been underway. So I'm going to bring it back down to the daily here. So what do we got going on? Well, I originally had compacted everything down, but counting it as best I thought I was at the time, which would have put us more in towards the end phase of this cycle third wave. So closer to the completion point for minute wave five, minor wave five, et cetera, all the way up to that cycle third wave. And then I started to get information and get data from that is algorithmically generated that basically was showing that the rally phase is very likely going to surge higher in December of 2025. And I thought, that's interesting because I kept feeling that we had a very strong possibility of completing this much sooner, possibly this month in July, possibly August, and maybe even September. And now it's kind of being shown that we might run this all the way out to December, with December holding a surge higher. With all of that in mind, I've gone back and I've looked, it's like, okay, one of my, if I had to say weaknesses in Elliott is that sometimes I tend to count too fast. And so when I get five, I'm done. I go here and I go there without giving that extra room for the market to continue to subdivide, normally within a third wave. So let's take a look at this minute third wave, where we see it is subdividing once, and that is all within inside the five waves that are required within minute wave three. And then we get another subdivision within three of the three, and that's also pretty normal. So here we have minuet one and two, and then we break down to sub one, two, three, four, five for minuet wave three. Put in minuet wave four, we're in minuet wave five. Now here it starts to get a little tricky again, because actually this on a daily chart we can see one, two, three, four, five, one up, made a new high above the wave five, above the third wave, which was what was expected, and we are looking for a completion point for minute wave three. And we've already gotten above 1.618 in terms of fib resistance. And that came in at 44,460. So what are we looking at? Well, we have that high at 44,885. What can that be telling us? That this is maybe just wave one of minuet wave five. And that maybe what we're really going to get up to is we still have a one, two, three, four, and a five to drive this thing much higher. So in lieu of that, I've included now, well, actually, you know what, I can go up here and I can change this to 1.882, 2.618, and let's see what that looks like. And you can see that takes us up a little bit more. That takes us up to 45,509, which again, new all-time high. That's what we're looking for. And I'd like to see it inside this third wave without having to really start to press on the minor fifth, which has resistance at 46,115, let's call it, 109, 110, somewhere in there. But then also this minuet fifth wave, now that it's exceeded the 100%, its next level is 46,183, I think, somewhere in there. Oh, also, like, yeah, 160. And then, so we've got a lot of resistance right in there, a little pocket of it right in there. And that also can just show us that maybe this will just extend a little bit more and not have necessarily be running up above 46. But ultimately, again, in the cash market, we're looking for the minor fifth wave to move us to new all-time highs. So, but as we move up, we want to make sure we're counting five waves. So again, we're just looking for the minute third wave right now in the cash market. And that might take us to those new all-time highs. So we have 45,509 to 46,000, what did I say, to 180. And that's a nice window. And so I'm going to call it that that's really what we're going to be looking for, and let this play out. Let me bring this down to the daily and let this play out a little bit cleaner to see if we don't just extend out and that we have one, two, and then this could be a three, four, and a five, or it's just going to continue to build This is one, this is two, and then I got one, two, three, four, five, and then a four, and then another five, and then we get up to that minute level up into this area, 46,000. And we complete minute wave three. We come back down towards this area, 43,758, 59. In here, previous fourth wave. And so, or actually, it would actually be a two. So if it's going to turn into the or previous fourth, there it is. There it is. The previous fourth wave is 41,925. So we would be looking for, no matter where we get up here, we're looking for a fourth wave, another fourth wave, and that's actually the marker. Let me go back out to my daily. That's actually the marker. So whether we get above here, up into here, we'll still be looking for back into this area, but that's actually the window of opportunity. 43,300, no, 43,100 down to 41,000, almost 42,000. So it's a nice window for the market to pull back over time. And again, we could get another one of these. We can get another extended, more of a sideways move. Don't forget, inside that fourth wave, there's about 13 different patterns that the market could take, from triangles to double ABC to triple ABCs to WXYZ. We have a lot of different choices that we have for a corrective pattern versus the impulse. There's only one impulse. It's one, two, three, four, five. So once we get into four, it could take its time. Again, pushes through August, pushes into September. We don't know. So, and then we start that surge, and then we get the bulk of the surge probably. And again, we're looking at, we have October, November, and December. So, what's going to continue to fuel right now? Well, we're still in the midst of, we still only just started the whole rotation of earnings reports. Last week, we got the banks and then there's a whole bunch of others that come out. But now they're going to start to really come out much quicker. So being in the Dow only has 30 stocks to cover, but it's going to also spill over. We have the S&P, we've got the NASDAQ, and it just everybody's going to have to report second quarter earnings. We'll see how those start to line up. I think we might. My own preferred way that I think we're going to go, I think we will go to a new all-time high here in the Dow, as the S&P continues to do, and then put in that minute third wave, and then come back down in the fourth wave, and then that's what I think should take some time. We might have a few quick downs, but I think it's going to be over time. I think it'll be down, sideways, down, and so we'll see. We will see how that all unfolds. So that's kind of my thoughts here on here. The market continues to look like it's coming off of, at least on the daily, of an overbought condition, and did not have to get that far to really kind of start to relieve it. Although once we get below 30, then it becomes oversold. So not that it's all that terrific. So we could probably go up, get itself back into the overbought readings, and then have a little bit larger of a correction, which would probably bring us down and bring us into a wave four area. All right, let's take a look at the futures market. And again, same kind of deal, except I put a couple more things inside here. Because we also have the possibility, if indeed this is a completion point for minuet wave 5, which I actually do not think so, but it could. Where's 1, 2, 3, 4, 5? Again, it could just be wave 1, and this is wave 2. Wave 2, 3A2 matched. There's the 50% in case we still have another little bit of a leg down to do. But it actually could kind of come down into 1, 2, 3, 4, 5, but in more of a diagonal for the A wave of a wave 2. And then we'd be looking for it to come down into here. But here's what I don't want to see. I'd have to consider this wave 1, and that's 43,515. And so wave 2 can come all the way down, but anything less than that, we're not looking for it to break over for wave 1, if indeed this is just a fourth wave. So, yep, we can have a little bit additional, and it can come down below here. In fact, I can include in a wave 2 position I can include wave two all the way down to 618, which is 43,275. So we might see some downside first. Then the market continues to move up to put in the finishing touches on that minuet wave five, which again comes in here to here. In fact, here we have 1.882 and we have 1.618, just basically all exceeded by very little. So it can get up there again, maybe even go above it, get in between, and still put in, well, we'll see what we're going to call it. I got to see the structure. But here, new all-time highs. Here, new all-time highs. Here, almost. Not quite. Because in the futures market, our all-time high is 45,189. 45,000, no, 45,227 is the all-time high as it stands right now via the September 2025 futures market. Now, our moving averages are actually looking, looking really good still. Yeah, we got a little bit of a flat here. Let me just kind of go like that and see. Yeah, there we go. We have the 200, we got the 78, we got the 30, and we got the 8, kind of playing around on this little downside action as the market got pulled lower on Friday. So that was after basically being flat all the way through this. So again, not really seeing much more than just that. So I'm going to keep this on a little bit short and sweet side. And if you are a member, you're going to be able to go in and listen to the NASDAQ and into the S&P as I talk more in detail about where I think the canary in the coal mine is going to remain as we get closer to these completion points for the cycle third wave. And that canary seems to, in my view, be the Treasury market and the US dollar and what we're seeing happening in the dollar as a result of the trade wars. And not necessarily that we're seeing inflation, but I think we're seeing the US start to get isolated. Like, no, they're not going to come back and they're not going to have to deal with the United States like we're the almighty. And I think that's the big change that's going to start to happen. We're seeing, maybe Canada and Mexico start to walk away and make trade deals with others moving forward. Still going to have some with the US, of course, but whether we pay attention to the tariffs or even accept the tariffs or they accept the tariffs from our country, they might just walk away. We're seeing that happen also. European Union, I know China has an agreement in place, but those things can change. We have threats on just about every other little country on the globe about moving forward. You're going to have tariffs because we're the mighty. So I think those things can really break the back of the dollar and the treasury market and a lot of other things eventually. Then, of course, the market. And why? Well, because the U.S. is dependent on exports. The U.S. is dependent on exporting its inflation, exporting its debt. And so we've already got those downgrades, folks. Three of the major. We got Moody's, we have S&P, and I just forgot the third. Moody's, S&P, and there's one more. It'll come back about 3 o'clock in the morning, so make sure to type it in. So all that in mind, the United States may have a little bit of a problem trying to sell. Excuse me, hold on. The other thing is my voice goes. So the United States will continue to have problems in trying to sell its debt. We're adding several trillion more dollars onto the debt, all to give tax breaks to those who don't need it, and to really put the squeeze on the middle income to low income people. Now, having said all that, we'll do our best in trading. And so, but I think in terms of what's going to be happening, I think the US will become more and more isolated on the international stage. That's just me. Anyway, I am going to end it there. We'll continue to keep our eye on all of this, and and I will attempt to be more consistent in getting these updates done and out in a more timely fashion rather than this is the first one in 2 weeks. My apologies on that. All right. So have a great trading week. And please leave comments. You tell me what your views are. Tell me what you think. And we'll be moving forward. I am basically still planning on setting up a membership, which would include everything that I publish under one price. And the purpose behind that, and I will try to make a separate video, but it really does come down to that I am looking to start to slow down with how much work that I'm taking on. And if I'm going to take on the work, then I need to just not necessarily have to say that I need to be paid for it, but I need to also put things into alignment for what I am going to do and for my own retirement, so to speak. So I'd be looking to continue to provide it for those that have an interest, but I would want to put it everything into one package, one price. Everything that I publish goes out under a membership, and that would include the S&P. That would include the S&P, the Nasdaq, the Dow, the Russell, gold, silver, platinum, and treasuries. So those would start to be more consistent. I would pull back from likely from trading and spend time just on providing the analysis. So that's why there's got to be that difference of, picking up more memberships to make up for the gap of not necessarily trading. All right, enough on that. More when I get closer to that decision. And the next update is likely going to be next week.